Yeah, first off, I think that the trade war has created a bit of uncertainty in the markets. That's pretty obvious. While there hasn't been a broad impact directly in the flows, that has impacted the sentiment. So any sort of resolution is playing to that, and that's where you're seeing the investors liking the idea of having this uncertainty being removed. Now, as regards the discussion with China, it's pretty clear that the discussion with China is likely to be a much more protracted one, and which goes beyond probably the midterm elections, because that's a much deeper issue, and hence you probably see it at the bottom of the list and the trickiest one to resolve.
Shrikant, is this basically the main risk there? Because obviously this decision for Mexico to move ahead in an agreement with the United States has really left Canada exposed, hasn't it?
Well, I believe that the resolution here, which has already been thrashed out with Mexico, is definitely a step in the right direction. But this needs to be ratified, so it's not as if it's a done deal. It does put Canada in a bit of spot to move quickly and also get the resolution in place. But a lot of balls still in the air in terms of how and when these eventually get ratified.
And Shrikant, we also listened to Secretary Mnuchin there. He seemed rather encouraged by the steps that the PBOC has taken on the yuan just this week. It is believed that, in fact, the yuan was an area of concern that Washington has raised previously. Overall, though, many are saying, look, the PBOC may have to go further with stimulus, with an easing bias to help offset some of the pain from the trade fight. So do you think this will continue in many ways to weigh on the currency, or have we seen the worst of it for the yuan?
So I think the level of 7 to the dollar of the yuan looks like a line in the sand, and clearly the steps that PBOC has taken over the last few weeks clearly are intended to bolster the level of the yuan to keep it around the 7 or lower than that level. Given the nature of the trade war and the likely protracted nature of how long it's going to take to resolve, quite likely that these steps will continue. And it's going to be something which will be watched very closely.
So it seems to me you're still hinting at plenty of uncertainty, plenty of time to go here with this uncertainty hanging over investors. And still, we are at a late stage, an extremely late stage for the U.S. when we talk about the bull run there. So where are you looking to put your money?
So firstly, as you correctly said, we are in phase 3 of the bull market. Given that there are 3 more hikes, at least 3, and it seems that the markets are hinting at a 4. We still have some legs for this rally to go on. So we are overweight equities. We would like to continue to keep some exposure in equities. Beyond that, we are looking at U.S. investment grade in the fixed income side. Sectorally, we are feeling good about technology, as well as healthcare. So these are the sectors where we believe there is value. And more on a tactical basis, the Asia markets have sold off in a significant manner, and we have a dispersion. So we believe there is value in the Asia equities as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.